in some instances, and in personal lines, this is a great analogy. We're too soon to admit defeat. And I'll circle back to personal lines, but drive around your neighborhood. There's a ton of sedans, right? And, BMW and Audi have come down to a price point that, GM and Ford were in at that point. And the other competitors that you were just talking about. The problem with the American manufacturers is they weren't providing a product that the consumer wanted. Yeah. Right. And so when we as any industry, and this now we becomes insurance, don't provide a product that the consumer wants, the consumer will go find it someplace else. Yeah. There are a ton of sedans out there, right? Yeah. Just not American made sedans anymore. Right. And so from an insurance standpoint, and I've been asked this a lot over the last 2 years because of some transactions and things that I've been involved in, and I get asked all the time because we're almost a little bit over 50% personal lines, and for us, I mean that's $5.5 billion of personal lines within our ecosystem, written by our member agencies and with our partnering insurance companies. And there are consumers that want to use an agent. And so, we talk a lot to the agencies about going out and proactively finding the client in their community. And I always sort of say community, geographic or digital. And ideally, agencies are merging those two things if they are a geographically located and not a completely digital insurance agency. But going out and finding those consumers that don't want to save 15% in 15 minutes, that are looking for coverage, that don't want to be the insurance professional in their household. They're looking for that advisor and that advocate to make sure that they're adequately protected. And a lot of those people, by the way, are insured in the captive and the exclusive channel that have a local agent. And now they're going to be looking for another local agent. Just now it can be an independent agency. So there's a lot of that business out there. And so I don't think there is any reason to surrender personal lines or feel as though we're in a corner. We should be coming out of the corner swinging, and we should be on offense in personal lines. It is, it's a growing market. We're probably in a little bit of a recessionary period right now, but people are buying cars, people are buying houses, they need the protection, but we shouldn't be going after the client that is being targeted by somebody that's spending $1 billion or $2 billion a year in advertising. We should be going after we need to fight in our weight class and be going after the client in our community that wants to do business with us. So I'm bullish on personal lines. I think it's an amazing opportunity. I think the numbers are now, when they finally get published for 20 and 21, the independent agency channel is now gaining traction in personal lines. The captive channel obviously is continuing to contract. And I think, at least for the time being, we've seen some leveling off of the direct-to-consumer channel because they haven't been able to break into home, they haven't been able to break into commercial lines, and they're sort of a one-trick pony when it comes to, I'll get in trouble for this, but they're a one-trick pony when it comes to, monoline, low limit, not real loyal private passenger automobile insurance. And so they're good at it. Maybe we let them take some of that stuff, but we'll take the rest. This is Matt Masiello from SIAA, and this is the future of insurance.